Hi, I'm Jordan. This is Steven, and welcome to Reflexivity in Markets. Today, we are jumping in the middle of a discussion about current portfolio allocations and kind of more granular approach to what we're doing in crypto markets, as we previously discussed in the last episode, to respond to the changes on a macro level. Um, and Steven was just discussing kind of his current allocation mentality. Uh, Maybe you want to give a brief overview of that, and then I'll kind of hop into what I'm considering doing given the changes.
Yeah, I think last episode we discussed the US dollar supremacy issues and the kind of the fleeing of the US dollar. This week we've had more kind of evidence of that happening. We'll talk more about that. So I went into Bitcoin kind of after all that happened, and today we see an uptick in ETH. So I did move some Bitcoin over to Ethereum, and I also bought some Arbitrum as the layer two play on ETH. As ETH gas prices will continue to surge on any volatility, people are just going to look for cheaper options. So that's kind of my Arbitrum play. I also LP'd a lot of that. So I did some Arbitrum ETH LP. I also bought some Avalanche just as an L1 bet. Uh, Jordan and I are both AVX bulls, even though real world use cases doesn't necessarily translate to price action go up. Uh, so yeah, that's kind of where I'm sitting now. I'm a lot of ETH. Got some Arbitrum. I'm LPing a lot for this volatility that we're seeing here. Trying to get some trading fees. And yeah, bullish.
Bullish. Also, he's understating his exposure to Joe, which has been an epic play for the last
I
month.
mean, that's a given, right? I mean, Joe is the king of liquidity right now. Outside universe UniV3, the fees are just you just can't laugh at them. You
Where
can't.
are they? Where are they ranking right now on DeFi Llama?
All I know is their TVL to fee ratio is absurd. Um, So they're getting the most fees per trading compared to UniV3. Part of that we'll talk about later, but like they really focus on concentrated liquidity more than anything. They wanted to make it uh, they want to make the spreads as thin as as thin as possible, so that they can really get the fees for the market makers. Um, while UniV3 focuses on, you'll see a lot larger ranges in their liquidity, um, so that yield isn't as uh, isn't as enticing. But um, with V2.1 coming out, uh, that was just announced, I think, today. It's going to make it a little bit more UniV3 like, where you can have larger concentration of pools, and eventually we'll see uh, some Joe fee accrual as well for V2 pools. So that's exciting. So yeah, that's my exchange bag as well.
Okay. Yeah, on my side, I'm kind of taking a moment to pivot, evaluating kind of what most people in here would find more boring fund allocations for both VC funds and liquid financing funds, um, or liquid token funds. Uh, I'm a little bit less of a trader than many of you, and than certainly than Steven, but I'm a believer in enough plays that it makes sense. I went heavier into gold on the news because it is a an asset that or an asset slash commodity slash form of money, and that last one's very important. That has kind of lost its luster, and as all the wonderful headlines are saying, gold's getting its shine back. Well, mostly, gold is just a really long dated human construct for value. And we don't really have a great explanation as to why we all value gold so much, but we just keep doing it. And if you do something long enough in human history, eventually it becomes kind of the basis of truth that gold is valuable. And if you've ever said to someone gold's not valuable, they would just kind of laugh at you. It's literally the definition of the gold standard. It is a colloquial saying and also an actual meaning. So it's a very institutionalized level of knowledge taken to be true without really needing an explanation. And in this moment of dollar decline, uh, it's while it may be a large basket of other currencies that emerge, we have seen China buying a lot of gold, and a lot of these currencies that may be forming a new basket will also need some level of robustness and they may look to some of the longest standing solutions to robust money creation that's ever existed. That would be gold. It's kind of had a struggle in performing as its inflation hedge for a long time, but that's a lot been influenced a lot by how many financial assets are denominated in the dollar and alternatives to it. And in this moment, we are losing some of those alternatives. So yeah, I'm kind of meeting with some new advisors to approach new solutions to this, and we'll bring some of those solutions once I hear what they say. We'll keep the particular firm names out of this so we don't get into too much trouble. But let's say, top five banking firms in the world, and I'll be kind of synthesizing some of their thoughts into our next discussion of this. But I'm going long gold, long a little bit of Bitcoin. Uh, Kind of debating if, while I don't believe we're going to see a massive transition based off of this to suddenly everybody using Ethereum, I would go along the thesis that any of the mediums, including Bitcoin, that want to be used as some kind of or some micro portion of the economy, even um, are better done on Ethereum plays and on L2s and L1s. So BTCB on AVAX or WBTC on Ethereum or on Arbitrum all make better uses and more efficient mediums of exchange than on Bitcoin. And no one who's going to try to use any of this stuff is going to be okay with a 15-minute delay in knowing if they have their money or not. So yes, taken with the understanding that there is bridge risk, there is issuance risk for any of these synthetic versions of Bitcoin. There's also a hell of a lot of utility to them. So that's kind of where I'm positioned and trying to think about potential new plays, maybe in emerging ecosystems if we're going to get a little more degen. Uh, Things like Kava are kind of large ecosystem fund getting its second round of infusions right now in terms of energy and excitement. But yeah, that's my allocation's leaning more towards Stevens, and I'm just as we'd all say, a deep bag holder of AVAX that has not done anything for me in a while, but I continue to buy.
Yeah,
Um, Keep
yeah.
being
We'll
boring,
we'll
man.
touch on Bitcoin, BTCB in particular at some point. It's pretty cool. It's like a cool it's alternative to wrap Bitcoin. Um, more transparency, uh, a way that you can actually easily translate or transfer that BTCB into actual Bitcoin, um, yeah, through the core wallet. So that's kind of interesting.
Yeah, it's like kind of the closest form to native BTC on chain
Yeah,
without,
smart contract capabilities. Yeah,
yeah. And yeah, yes, we're not completely clueless about the idea that there are BTC layer twos that have emerged, and yeah, none of them actually have gained enough traction or functionality for us to be compelled yet. But keep trying, staff.
interesting. Yeah, interesting, but yeah, just nowhere close yet.
Yeah, you guys keep trying, keep building. We hear the POW consensus maxis. But we're still on the train of proof of stake is probably faster, cheaper, and more efficient. And some of the questions that people have around is Ethereum a security or not, I would say maybe less relevant, given that our decision to regulate markets seeming a lot less relevant right now.
Yeah,
Um, we may not want to have this completely uncapped security floating around, but it does exist, much like foreign trade exists. And we may not want, as a country, the United States and Canada and a bunch of others in the West may not have wanted Russia to have access to markets, but it turns out they have a useful commodity, and markets will adapt to facilitate its access. And that is what we're seeing. So, Stephen touched on some of the reinforcement of events surrounding what we discussed last week. We've seen more announcements from the BRICS, and that S is now starting to sound for South Africa and Saudi Arabia, and and an expansion uh, of those willing to break from the regulated participation in markets.
and today
Uh,
we saw Malaysia as well. to
Yeah,
get backing
and
from China, 69 billion from China.
yeah, so it's no people might dispute how much people can actually switch to a new reserve currency and claim all these this debt denomination is very sticky, and it's not so fluid that in 5 minutes or in 5 days we can see all that debt erased. Especially not on this default approach. That's a kind of an insane idea that people are just going to default. But that does not mean they can't repay a lot of this debt with trade that's now denominated in yuan, swap for dollars, repay the dollars, and then and kind of reduce the debt burden while reissuing in yuan denomination or in new basketed denominations to do that. Um,
Would those countries that are changing their denominations, will they have to uh, I guess whoever's issuing that debt would have to come up with some agreement where they would pay off their U.S. debt, and then so they would just be taking on that debt in a different whatever the different currency is.
right. It's just a
But
new.
it still has to be settled, right? It still has to be settled in U.S. dollars first.
Yeah, you do have to settle the payment in US dollars, but if you delete the it's not if the debt doesn't exist after you settle, there is still an exchange mechanism in place for whatever dollars had to be settled, and repaying those people if they're now willing to finance in yuan just means they're going to buy yuan.
Yeah,
Um, and there are some gaps here in the problems that exist. Yes, I've heard the complaints and claims around there's not enough Chinese debt in the world to make it a reserve asset, and no one just wants to hold an underlying currency. There's too much centralized control, the rule of law. You can list a dozen other arguments, but in the last 10 days, we've seen a swifter invalidation of all those arguments than we could have imagined. Um, Even at any point. It's just this is a whirling speed that is hard to even wrap your head around what it will mean. But it is a mistake to believe that it cannot transition. There cannot be a transition. It's a mistake to believe we can't restructure debt in new denominated in a new denomination. Debt is a synthetic creation. It is a contractual obligation, and if enough participants or holders of that debt are willing to change the terms of that because an alternative has emerged that's more stable or more trustworthy, they will do it. There's nothing that has ever prevented that. Uh, there's nothing absolutist about debt. It is just whatever the agreement is the
yeah.
debt. So yeah, it's time to stop being a dollar maxi, everybody. If you haven't woken up to the fact that the U.S. is has screwed up repeatedly in trying to offer a competitive monetary system that is also shoving U.S. policy down the throats of its users and participants, uh, it's not working anymore. And the Chinese seem very clear that they're willing to acknowledge most nations' sovereignties and the ability for those nations to do what they need to do while participating in the global economy. So yeah, this is a new chapter, and it might be bullish for some alternatives, uh, and for especially for the nations that don't want to switch from simply U.S. reliance to purely China reliance, or there may be a large case for a basket of currencies. And for some of them, they may even use this as a moment to test out alternatives in and if that even becomes a narrative, which is something we should always be aware of as a term in the crypto space, we could see a significant push around smart contract layers and where which ones might actually be viable for participation in at kind of national or sovereign levels.
Yeah.
And yeah, we're aware quant will get its mentions in this, but neither of us are really quant maxis.
Not yet.
Um,
No.
Not yet. Not yet. I,
Yeah.
I would actually argue that in some ways I don't see why and this is going to reveal my AVAX bullishness, why we don't just issue a CBDC on a subnet.
It's too easy. That's why.
It's too easy. It's too clean.
Yeah, it
Um,
makes too much sense. Otherwise,
it
it would have
does.
happened already.
So it's like, why don't we have an app layer in between that runs every? Okay, well, we have that. Layer zero can facilitate. So why don't we do an AVAX subnet with layer zero for it? It's all again all too easy and practical. So, anyways, that's kind of that topic.
So yeah, so right now, this past 2 days, ever since past really since the last week, where we saw more action on the uh, international currency. I don't even know what to call it. The fight for supremacy of global trade or global international settlement. Um, we see the U.S.
Fight for
Treasuries.
dominance.
Yeah, U.S. Treasuries have taken a hard reversal and are facing, um, are approaching technically, uh, you know, they're approaching the floor that hasn't been seen, since really 2022 of last year, where we saw the big incline of Treasury rates. So, uh, and that coincides with the Dixie continuing to plummet from beginning of March. So just interesting to see how it's all working together here.
Yeah, I mean it's not looking. I mean rates are not holding. 10 years really not holding up. Like 1 year starting to slip. Even this terminal rate of 5.25 is getting hard to believe. Um, and there are some interesting questions. I mean, if you for those who are more history buffs on this one, uh, the idea that suddenly there'd be no demand, for example, for U.S. Treasury bonds by these foreign nations, and that obviously means that rates are going to have to climb, and that our markets will reflect kind of more what third world nations or periphery nations, depending on how you want to term them, have as their interest rates. It would be important to remember that Japan has maintained effectively zero interest rates for a very long time, um, despite having collapsed at an equities level and having their, the demand for foreign treasuries, foreign Japanese debt decline significantly relative to what its dominance was in the 80s and early 90s. So it's possible that we just monetize all the debt and throw it all on the balance sheet of the Fed as we try to keep printing our way to stability. Um, Dear Lord, the world is changing quickly, and this is not looking good for us. But it does not mean interest rates necessarily have to climb, and technically, it doesn't even mean that the dollar has to collapse rapidly in value. Um, but we are seeing a moment in the reckoning for Japan, and we may see some of the lessons from that translate at an accelerated pace to the United States. If it turns out all the thesis that we can copy this playbook for Japanese quantitative easing and support of their markets turns out to not end well for Japan, for example, then it may turn out it doesn't end well for us. And once we figure that out, we just jump to the end of the game very quickly. So
Have
yeah,
you looked into energy markets at all? Uh,
um, oil.
Especially with everything that's happening, yeah, oil in particular. We see
Yeah.
countries moving away from trading within the U.S. with the U.S. dollar, as
So yeah.
energy is just probably one of the largest traded assets apart from debt in the world.
Yeah, I mean, when we're not producing fake things that have only a meaning on paper and in court, we are producing real things that actually are needed, like oil. And setting aside whatever political or ethical stance you have around that, we still use it. It's still critical, and everyone still needs it. Uh, and no, electric cars will not solve this tomorrow. So, in that context and understanding, if you do not settle oil in dollars, dollars are a lot less relevant.
Yeah,
And if you are a nation that does even settle in dollars, it is still unclear that you're going to follow the policy caps for capping price of oil. And so in last week we saw things like several nations switch to settling energy purchases in yuan, or being willing to settle them in rupees, or being willing to settle them in some proposed new thing that they haven't started settling in yet. But if we were to look at an example of this, the yuan overtook the dollar in about something like 8 to 10 months from the moment they started selling direct trade between Russia and China in yuan as the dominant currency in for trade within Russia. That's largely because Russia's trade is mostly in oil. But if you were to look at Japan, for example, Japan has decided, has exercised their both sovereign right and shown a very clear need that they need the Russian oil, they need the Russian gas, and they're not going to follow the cap. And it doesn't really matter that we rubber stamp this and say we gave them permission, quote unquote. Japan would not have asked for permission if we'd said no. It was a total. It was very much like the Arbitrum vote, actually. Uh, we weren't really asking for permission. We were asking for all of you to vote to say we did it, and acknowledge that we were going to do it. And in that, it's kind of hard to come up with a story where the United States and its desire to cap the price of global oil has any relevancy anymore. We don't produce enough oil to flood the market for our own country to have a lower price. We definitely don't have produce enough oil to suppress the value of oil globally. So we saw OPEC do a voluntary cut by Saudi Arabia. That pumped oil prices significantly. At the same time, Japan announced they'll be buying above the cap, also pumped oil prices. Uh, and uh, and you can get all angry as you want. Anybody who has their perspective on this from political angles, these are just the facts of the market. So, welcome to a world that continues to be backed by oil.
Yeah.
Uh, so now that's our kind of at least my take on what oil markets are currently meaning and how irrelevant we are largely. Um,
Yeah.
so yeah, I don't know if we sound pessimistic. Sorry about that. It's a
Hey,
dark.
we're bullish alternatives, right? We're bullish there's always somewhere else to bring your attention. Uh, but unfortunately, in geopolitical sense, we are not bullish. We are, yeah, personally, I'm a little bit, I guess, unnerved by what's happening. Um, because anytime you see a massive shift in power at a global level, eh, and especially when it comes to settlement, and if you look at the past, I don't know, 50 years, most of conflict has been uh, surrounding oil and the acquisition and control of it. And it just seems like everything's kind of falling into place for another crisis or another conflict. But hopefully it doesn't happen. Hopefully something gets solved before then. But
I mean, I'd love
yeah,
to say that's a fairly dark perspective, but if you went past that, you'd go back to an era where we were at war over whether or not, in proxy wars, over whether or not capitalism or communism or socialism would lead the world.
yeah,
And in every nation that we had this battle, we had actual wars. So if you go back before some of the more oil hotspot wars that were recent, you would get back to the wars that were proxy wars between Russia and the United States about, are we going capitalist or are we going
yeah,
communist? And right now, that is the a similar version is being fought out, which is, are we going regulated dollar markets without total dollar dependence as the form of capitalism, which is starting to look a lot more like this is not intended to be an aggressive statement that's inflammatory. It's just a factual observation. This is not a neutral technology. It is a becoming utilized as a top-down, politically controlled entity, and it's losing its utility relative to versions of this that are being offered where there's more decentralization. Even if they're not DeFi based, they are more decentralized and offering alternatives to a dollar denominated and dollar controlled U.S. policy financial system.
yeah. It's
Uh,
a tool, the tool for power, right? It's a tool that maintains power and and expands it depending on what their goals are. But I mean, U.S. dollars has been that tool, um, and now that the power is diminishing, the effectiveness of that tool comes into question. And when that happens, you start to see changes in policy, which, as freedom-loving um, people, it always kind of comes back to you know the conflicts between what people should be able to do with their money, what the power of that money is able to do. And when you look in terms of international settlement now, that's coming into question. So the U.S. has to respond in some way.
I mean, arguably, all the things that were fought against in the dispute of communism versus capitalism are we're now on the other side of. It was capitalism allows freedom and individualism, and the American way of life is start your business, do what you want to do, let the market settle it out. Just don't get on the wrong side of us in a military capacity as the United States, and we're okay. And that was the open invite to all to participate. Today, it's a lot more if you disagree with us on one of our many policy standpoints and our populist Twitter politics gets active, we will try to force you to comply through financial means. And that sounds a lot more like a top down controlled economy and and again it kind of erodes the utility of the service we're offering and doesn't really sound very let your country decide its own will and self-determination. It sounds a lot more like what Russia was telling countries to do, which was centralize control of that plan and kind of follow our model for it, and then we'll support you in your goals. So yeah, rough moment ahead, but opportunities on the horizon despite that. Happy to be discussing this with Steven here. And
Definitely.
if there's any other topics that kind of came to your mind, I would say maybe let's take a moment and talk about are there any categories we're interested in? I mean, in the last week we talked about um, kind of what I would categorize as our more degen plays.
Yeah,
Um,
I kind of want to talk about with the Shanghai upgrade happening in
okay,
just
let's hear
under
about
a
the
week. I guess it's a week tomorrow, uh, where we have all the beacon chain ETH getting into the queue of being able to withdraw. And some estimates are looking at like it could take up to a year for everyone to withdraw their ETH from the chain. But regardless, right, it's going to be an unlocking. So people have their theses of what that's going to look like. Most times when there's unlocking, there's like a short downtrend for a couple of days, depending on the asset, maybe a couple of weeks, and then you see a rebound back to the previous highs, depending on what's happening in macro. Uh, but it's just interesting to think about like all these the past since ETH 2 came out, or the ETH went from proof of work to proof of stake. That was like a monumental technological feat. And this is just like another step towards that direction of like ETH just doing things. It's still secure. It's not scalable yet, but it is the it is where it is for a reason in terms of market cap. Um, number two under Bitcoin. Um, but it just keeps chugging along, and it keeps doing what they say they're supposed to do. And now with all these ETH L2s coming out and competition in that market, and most of those being settled with ETH for gas, it just keeps. I'm just bullish ETH. Um, if you asked me a month ago, I'd say I'd probably be bearish going into the Shanghai upgrade, um, just purely based on the unlocking. But after thinking about it now and seeing just how resilient ETH and their L2s are, it's pretty interesting uh, just to see how everything still just runs so smoothly. And it doesn't matter what happens geopolitically or through USDCT pegging or whatever, ETH just continues uh, to validate blocks, and it just works, and it's the most secure smart contract chain that we have right now. So for that reason, I'm bullish. Will we see some short term? It'll be some crazy uh, volatility coming up to that, leading up to the 12th. I think we may be even seeing that now. In the past couple of weeks, people are deciding where they stand. Um, but I think it's just going to be nothing, Burger. I think it's going to be okay. There's volatility leading up to it. people are going to be expecting a dump. But because again, all ETH isn't unlocked at the same time, it's not. That's just not going to be the case. Um, I
I would
still,
almost argue that there's so much bearishness that people have talked about with the Shanghai unlock that ETH has a chance of kind of surprising everybody here, which is that it's
it
the
does.
wrong.
Yeah,
There's so many bearish narratives on ETH that if it just doesn't nuke, like
and you
between the
have to, and you have
unlock,
to see it, right? And you have to be able to like see that side, and that's where I was for a long time. But once I saw that everything wasn't being unlocked right away, um, I still think like, at least 30% of the lockers will sell eventually, whenever that happens. So that's a lot of selling, but it's going to be dragged on over a long period of time. And during that time, you have all these. We'll talk about it in another narrative, but liquid staking tokens and the services that they provide for ETH, like that's a huge narrative, and it's a huge way that people can still get their exposure to ETH. It's more liquid now. It's just a better product. So now, um, why wouldn't they just choose a new staking uh, alternative where they don't have to lock it, right? It's just like their life just became that much easier. Um, and we'll look at eventually the percentage of people in profit from stake that were into the beacon chain, but not many people are. So like it's not like they're taking profits by selling on these unlocks. So we're kind of around the part where some people are in profit, but a lot are still just underwater under ETH beacon chain staking. So it'll be interesting to see. But I think it's going to be like a little volatility leading up to it, and then the week of, I think it's just going to be sideways, sideways, and continue um, just being dominant. That's my take.
okay.
Yeah.
So I don't have any disagreement with anything we just discussed. So instead of
What do you
belaboring
mean?
that,
You're supposed to be
I know
critical.
I am usually really harsh, but actually just like it's the wrong time to be believing that U.S. anger or Elizabeth Warren anger about crypto or the SEC anger about crypto is really doing much because we're not even able to regulate basic markets that we've been part of for 80 years. So I'm just gonna bow my head for a moment and not be a hater because it doesn't seem like a lot of the world really gives a hoot what we think.
Yeah.
Um, so yeah, we'll see. Um,
It'll be interesting to see what percentage of stakers are American versus international. That'll be also interesting to think about.
be interesting to see if we could ever see things like that, given that everybody uses VPNs and
Yeah.
nobody knows how many wallets are controlled by the same person.
Yeah.
One of the big problems in all of this decentralization argument, of course.
Yeah.
Uh, and so I would say, kind of, before our next calls, the two of us, maybe let's take a moment and discuss Uni V3 and retouch on that kind of Joe point. What strategies, like Gamma or Lit uh, or Ice are maybe going to have a moment in the sun here as we see markets transition. Um, Maybe let's call this the ultra degen category. We're no longer even talking about liquid staking tokens. Or also, this is the
Microcaps.
micro caps and the volatility and dangers therein. So again, none of this is financial advice. This is all for educational and entertainment purposes. But we are going to talk about some of the interesting ideas that have come around incentivizing liquidity and liquidity management of V3. And then I would ask, because Steven has his finger on the pulse of this often very well, where is the Joe equivalent? Why have we
That's
not
that's a good
seen?
question.
Yeah,
There's Kyber has elastic pools, so it's similar, but it's more like Uni V3. Um,
no,
but the
I
way
mean,
that
where's the ice for Joe?
oh, like the fork of Joe.
Where's the fork of ice for Joe? Like, where's liquidity management on Joe as a
Joe
fork?
Joe is already developing that though. They're already going to
Right,
have
but like
their automated liquidity
they're gonna have their, so
management.
like, are we just not gonna
Joe
see?
likes to do everything in house, right? They like to do it because they just like to ship products. So I think it was in their last update they said their yeah automated pools are coming out um, through Joe. So there doesn't need to be another application. It's just gonna be all in the same app. Should be fairly easy. And I think that uh, my argument is for Joe value accrual for people that decide to deposit within that automated LPs or LBs, sorry, liquidity books for Joe. The fees, a percentage of those fees will go towards Joe stakers. I think that's what they're going to do because there has to be some sort of fee for using the automated pools as just as a service. So I think that's fair, a way to create the value. But yeah, there's no one's going to be creating like an automated um, LP service like Gamma um, or Ice because it's just going to be in house with Joe. So I'm excited for that. That's why I haven't sold, even though this run up has been crazy and it's kind of just been consolidating around 60 cents for a while now. Um, I'm also completely very biased with Joe. I was early on Joe in 2021, so um, it was very good to me then, and the team has just continued to ship. So
Yeah,
yeah,
I mean, I am not. I struggle because I met one person from the Joe team, and it was so discouraging that I ended up selling my Joe on a technology that I love, and Steven and I have loved for a long time. So it's a struggle there, but it doesn't mean we can't acknowledge the mistakes and the technology that company or that protocol. It's a company, guys. I'm sorry.
yeah,
Um,
and there's gonna
uh,
be alternatives, right? There's gonna be other like other there's especially now with UniB3 code being um, now open source. There's gonna be tons of forks. There has to be. It's a great product. People are just gonna slap a governance token on top um, and just make it work. And that's why Gamma is interesting because you have um, it's in the pools are not incentivized by Gamma token. They're incentivized by the applications that you're providing liquidity to or the assets within those pools. So that's why Gamma is interesting. Um, Ice is more of a degen play. Um, so there's going to be alternatives. I'm interested to see what, just like Solidly season, Solidly fork season, interesting to see what forks come out with, or what forks come out of this UniV3 open source tech, because there's going to be some cool stuff. It won't just be this. There'll be a bunch of like the exact same product with just like a extra yield on top of LPing, but I have a feeling there's going to be some innovation on top of it, which is going to be interesting.
I like it. I want to see things built on top of Joe now. But like I understand Joe's just going to keep eating them and it's like a really hard push because when you're it's not like Uniswap, which is the slow moving juggernaut and first mover advantage. This is a very dynamic team that will adapt to whatever you build on them, which kind of kills some long term development. But I'll be real. When was the last time long term got in the way of short term for DeFi?
Yeah,
So yeah, that's kind of a short recap of the Uni V3 move and some other plays we're looking at. So yeah, this is probably a pretty good place to wrap things up for us for today. Very
yeah,
casual kind of fireside chat around more active position management and what kind of plays we're making here. Um, so yeah, it's a
yeah. And
pleasure.
I'll be in Asia for the next while, so we'll see what the market does.
See what the
Um,
market does,
we'll try to get
and
a call in while I'm there. It'll be fun to do that, but uh,
yeah, I'll work around your schedule, and then I'll be in Asia also
yeah.
for ETH Tokyo, and then I'll be at Consensus as well. So looking forward to meeting more people there. It's a pleasure. I'm Jordan. This is Steven. Thank you for watching Reflexivity in Markets. Don't forget to like and subscribe.
Take care, guys.